Hi, this is Damien Qualter with this week's Property News and Views for the 29th of May 2009. First article today is Buy-to-let mortgages survive. This is basically a short article around the demise of buy-to-let mortgages in the UK since the credit crunch. I'm sure a lot of people can remember that you could get 85-90% loan-to-value mortgages just over 12 months ago. Now this is down to probably a maximum of 75% loan-to-value, and generally if you want a higher rate it can be even up to 60%. Saying this, buy-to-let still survives and certainly is seeing a renaissance in the last few weeks. I think a lot of investors are now seeing that it could be the right time to invest in the market, as it is bottoming out, and rises, whether they happen this year or next year, are imminent. I think, albeit smaller ones and probably more consistent ones than they have been in the past. Second article today is Buy-to-let boom soon, find out why. Nearly 5 million householders are seriously contemplating entering the buy-to-let sector for a limited period of time. This is mainly because of people becoming reluctant landlords, not being able to sell their house, or having properties which they've not been able to sell on when they've completed as a quick sale, and now are basically being forced to be landlords. Saying that these landlords now are seeing that the buy-to-let market is more of a long-term strategy, and that it is being used to supplement income, and with very poor returns in the bank and deposit rates at the moment, buy-to-let is becoming a much more attractive proposition, certainly for those people who've got larger deposits and cash to invest in the market. Third article today is retirement delays becoming more common. And I think most of us are aware that the retirement age for the over 50s now is certainly being extended beyond the normal retirement age of 65. Many people's pension provisions are not sufficient for them to maintain a sufficient lifestyle. Many people who are due to retire now are staying on to work later, work longer, and this also is probably a subjective nature that people now are looking to get into buy-to-let properties. Certainly older people, we're seeing with our investors that people who once probably in the past didn't want to invest are now putting money into property because obviously it produces a higher yield than bank deposits. Final article in today's news and views is first-time buyers numbers rise. John Charcoal, the mortgage broker, has done a study recently, and certainly in the first 4 months of this year, there are 3.5 times more first-time buyers entering the market than there had been in the past. The return of significantly more first-time buyers in the market this year, despite the lack of high loan-to-value mortgages, is one of the best indicators of confidence we've got at the moment. Ray Bulger, senior technical manager at Charcoal, has been quoted. A surprising number of first-time buyers have managed to find deposits of at least 25% in order to access a wider range of mortgages and cheaper deals. Many first-time buyers now are relying on parents to supplement deposits in order to purchase properties, and parents are becoming more and more keen to do this because obviously, again, if they've got cash in the bank, they are keen to get better returns in property, and if they're helping the children at the same time, it makes perfect sense. That's it for this week. I hope to speak to you this time next week. Many thanks.